Welcome back to the channel, everyone. Tesla is just about to enter the S&P 500. But what does this mean for Tesla? What does it mean for its future, and how can you as an investor profit from it? On top of telling you all of this, I'll also be telling you why Tesla is joining the S&P 500, just how high the Tesla stock could go, and whether you should buy Tesla on the inclusion day or maybe wait until a few days after. But before we get started, only about 15% of you are actually subscribed to the channel, which is really low. So subscribe, it's free and you can always unsubscribe later. Now let's get into the video. So let's start off by explaining what the S&P 500 actually is and why Tesla is joining. So the S&P 500 is an index or a list of the 500 largest companies, but it actually contains 505 US stocks because obviously some companies have multiple classes of shares. The value of the S&P 500 is taken by combining all of the market capitalizations of all of the companies within the S&P 500 and dividing it by 8.7 billion. I don't really know why it's 8.7 billion, it just is. And we know this because on the 30th of September 2020, the market cap of the total S&P 500 was around 29 trillion. And if we divide this by the value of the S&P 500 at that time, which was $3,363, we get 8.7 billion. Therefore, the S&P 500 is weighted by market capitalization. This basically means that the larger the market capitalization of a company is, the greater of a portion it holds in the S&P 500. For example, Apple has a market capitalization of $2 trillion, meaning that it makes up about 6% of the S&P 500. The smallest company in the S&P 500 is Under Armour, which has a market capitalization of around $7 billion, meaning that it only makes up a very, very small portion of the S&P 500, about 0.01%. Obviously this means that the bigger companies affect the price of the S&P 500 more, because obviously if Apple goes up by 10%, it has a much greater impact on the market capitalization than, for example, Under Armour going up by 10%. Now you might have heard that Tesla is actually joining the S&P 500 as well. But why is it only just joining now, and why didn't it join years ago? Well, the S&P 500 has some pretty strict entry criteria. The first is that it must be a US company. The second is that it obviously has to have a higher market capitalization than the smallest company currently in the S&P 500. It also has to have pretty liquid shares, and they basically want at least 50% of the shares available and trading on the exchange. The company also has to be profitable for the last 4 quarters at least, and obviously Tesla has only recently become profitable this year, and that's why it's only just being added now, and it wasn't added years ago. There are currently a lot of very large companies that aren't listed on the S&P 500 because they're still loss-making, like Uber for example. Maybe one day this company will become profitable and will also join the S&P 500. Also, I'll get this one in early, but be sure to smash the like button down below if you enjoyed this video because it really helps out my channel. Now let's get back to the video. So why did the Tesla stock increase so much after its announcement that it was going to join the S&P 500? The stock has risen from around $408 per share back in November when it was announced that it was going to join to nearly $700. Well, firstly, it's obviously great news for Tesla that it's now profitable and has managed to hold that profitability for a full year. And therefore, it's also now going to be traded by index funds because it's joined the S&P 500. Index funds primarily invest in indexes like the S&P 500. And because index funds are going to be investing in Tesla, regular investors like you and I, and even much larger funds and banks are all taking positions in Tesla before the index funds buy in, so hopefully the price goes up and we can all make some profit. However, this does put Tesla in a bit of a bad position. Many short-term investors have invested into Tesla just to take advantage of its inclusion into the S&P 500 and will probably sell their shares shortly after, and therefore the price of Tesla could tank quite a bit after its inclusion. But I'll talk more about that later. The reason why many regular investors and investment funds are investing into Tesla now is because when it's included into the S&P 500, all of those index funds that track the movements of the companies in the S&P 500 will have to buy shares of Tesla all at once. Those index funds can't really buy shares in Tesla right now, or they couldn't buy them on Friday because it wasn't included in the S&P 500. And they can't wait a month to buy shares in Tesla because, well, they won't really be tracking the S&P 500. So they need to buy all of those shares on Monday when it's included to really be an S&P 500 tracker or S&P 500 index fund. And I think what you also have to remember is that these index funds are going to have to buy a lot of shares of Tesla, whatever the price is. For example, Tesla isn't going to be the 499th biggest company in the S&P 500, where an index fund would only have to buy 0.01% of their total investment in Tesla shares. It's going to be like the 7th largest company in the S&P 500. So they'll need to buy a few percent of their entire holdings solely in Tesla shares. Therefore, these index funds aren't just buying a few shares of Tesla here and there, they're buying a lot. For example, the iShares Core S&P 500 tracker by BlackRock has around $179 billion of assets under management and invested into companies in the S&P 500. Given that Tesla is going to have a weighting of probably about 2%, that means they're going to invest nearly $4 billion into Tesla in one day. And that's only one fund. Fox Business reckons that all of the index funds combined will need to buy about $83 billion worth of Tesla. Now, Tesla has a daily trade volume of around $30 billion, and therefore this will massively spike the volume of Tesla traded in one single day, causing a massive price run. Also, if you want to be just like these index funds and grab yourself some shares of Tesla, be sure to sign up to free trade using my link down below in the description to get a free share worth up to £200 when you invest a minimum of £1. Yep, that's right, you only have to invest £1 and you will get a free share worth up to £200. Many short-term investors are buying Tesla now because they know that the index funds will have to buy a load of Tesla all at the same time, causing a massive price run and an even further short squeeze, therefore leading to massive profits for someone that can get in at the bottom and out at the top. But obviously, as I touched on earlier, once all of these index funds have brought their shares in Tesla, well, that's it. They won't need to buy any more shares of Tesla, and therefore all of the short-term traders that bought their shares low and sold it to the index funds will then not really be in Tesla anymore, and the index funds will have bought their shares, so the normal volume will go back down to normal, and the price will obviously come back down to normal as well. That's obviously going to cause a lot of downward pressure when all of the buying power has dried up, and instead there's just massive selling pressure from all of the short-term investors wanting to get out of their trades. If we look at the previous history of companies that have been inducted into the S&P 500, we can see some quite similar patterns. This graph here shows that a few days before a company is induced into the S&P 500, regular investors start buying up shares, causing a massive price run. This is usually then pushed up a little bit higher when the company is induced into the S&P 500 and the index funds have to buy the shares, but then we can see that it swiftly returns to the norm, or maybe slightly above the norm. I think that with Tesla, the small price run that usually happens on induction day will be a lot bigger because the index funds need to buy so much more shares. The stock nearly touched $700 on Friday, and therefore I think that on induction day it could potentially go up as high as even $800. But I also think that the Tesla stock will make a quite swift move back down to the norm because all of the regular traders that have been investing in Tesla for the short term over the last few weeks will all be piling out of their shares all at once. Although the tricky thing is predicting where the norm for Tesla really is, because obviously the EV market has been on a huge run up this year. If we look at the Tesla stock on a 6-month chart, we can see that the stock kind of held around the $400 to $450 range for quite a while. But considering the stock is currently at nearly $700 and could go up as high as $800, falling back to $400 seems an incredibly far way to fall. This chart shows that actually stocks don't fall back down to exactly where they left off from, they reside somewhere a little bit higher. So maybe Tesla could fall back down to around $500 to $550. But something I think you have to remember with Tesla is how completely illogical the stock can be. It's up over around 1,000% since March alone and gained around $300 in share value based solely on the S&P 500 announcement. There hasn't really been much news this year about Tesla, but the stock has gained massively. There have been some small news announcements, such as longer lasting batteries and increased production, but there's also been a lot of negative news as well, like lawsuits. Tesla at one point was one of the most shorted companies in the entire world, but yet Tesla still defies all of this and continues to rise. The Tesla stock also shot up straight after the announcement of the stock split before the stock had even split. It went from around $274 to around $500 a share post-stock split price, even though nothing fundamental about the company had changed. It would just make it cheaper for smaller investors to buy shares in the future. And therefore, while stocks tend to go up pre-inclusion and then crash back down post-inclusion, Tesla could equally just go up pre-inclusion and continue going up straight after. Or it could crash by like 95%. You just never really know with Tesla. So how does being included into the S&P 500 really affect Tesla? Well, obviously it becomes part of that prestigious group that is included in the S&P 500 and therefore can be considered a successful profit-making company. As I stated earlier on in the video, the Tesla stock is likely to rise during the induction day, and therefore Tesla could issue more shares and make a lot of money as the stock price would be much higher. They would get a lot more bang for their buck and could issue less shares and raise more money. They could realistically issue nearly as many shares as they liked, because they know that all of the shares are going to be bought by the index funds, as long as they don't issue more than $83 billion worth of shares. This means that they'd raise way more money for future projects, such as new battery technology, the Tesla semi-truck, the Tesla Roadster, or new cars not even announced yet. So the main question is, should you try and buy Tesla now on the inclusion day, or maybe wait a few days later? Well, you could try and buy the shares early when the price is still low, and then sell them when they're higher after all the index funds have bought in. But this is quite difficult and is really a day trading strategy, and you could end up getting burnt quite heavily. Therefore, it might be worth waiting a few days for the Tesla stock to cool down and for the post-inclusion drop to ensue. Therefore, you could pick up some shares of Tesla on a pretty nice discount and just wait for the price to go back up as the profits improve and the production improves even further over the next few years. As always guys, if you enjoyed this video, then be sure to check out some of my others. Alternatively, subscribe to the channel and ding the notification bell, because that way you'll be alerted when I upload a new video. Cheers!